time to look at oil. XOP, yeah, you know what? All right. Symbol info XOP on Amex. It's a ETF for oil and gas explore and product. Exploration and production, maybe. And I did May 17th, I did a podcast, and it was starting stage 2 right here. But what happened after that, guys? Candles are added, chart morphs, and let's see what we're dealing with right now. Monthly define, breakout line. So even if we had a stage 2 on the weekly or started a stage 2 on the weekly, this is how I check my monthly. Always make sure the higher time frame I have a breakout in my direction. The ultimate breakout has not been surpassed. We had a gap up at the beginning of the month, be above the breakout line, only to come back within. So that's the formation right now. Higher lows, higher lows, higher lows. So who knows? October's not done yet. Hopefully close above the 12-month moving average. And we'll know if we have another, next time we have a green candle, I'll be able to tell you higher lows, and then after that, make another run out. High, low, big move, high, low, smaller move, high, low, smaller move, contracting, less volatility, and after that coils up, and then bam, explodes. So we're very close. Could have probably got trapped on the weekly if you didn't wait for the monthly candle to close above this important breakout line at the 43.15 level. Open, yeah, 43.15 level. If you didn't wait for a monthly close above that, all these wicks, the noise, these are closes on the daily and weekly candles. Then you'd be trapped here. Then after that, price action goes down, probably triggering out wherever your sell stop is. And after that, you get discouraged, price action goes back up, you totally forget about the stock, and then you miss the big move that will essentially come from following this. Ooh, to the moon. Yeah. Cool, right? Let's go to the moon. But right now, we're not quite there yet. We're going to zoom in on the weekly, see if we're still approaching stage 2. Breakouts within breakouts. See right here, we had a nice double bottom, breakout, target reached, arrow, a closer target reached. I love the symmetry, get close to the breakout line. After that, 1, 2, 3, 4, 5 months, just trying to get out. Every time it dropped, buyers came in. Right now, the sellers really bring it down, but we'll wait to see at the end of the month. There's still a week left if they could bring it back up here. So that's how it is on the monthly, guys. Targets, if we'd have a close above that. Oh, let's do the conservative target, the closer pattern. I'd have it target all the way up here to 53. All the way to this natural resistance right here. And the further away targets, well, eventually maybe these further away targets, 56. I always trust more the closer targets from the launching patterns, and after that, as you go on, you might reach those further away targets, but you have to expect resistance here, previous support, now turn resistance, pullbacks, then you hit either your previous resistance turn support or your 12-month moving average, then you go up, make another test, hit some type of resistance, etc., and all the way up. All right, let's zoom in on the weekly. Wow, SPDR. Remove all drawing tools. So we are stage 4, stage 1, stage 2. Okay, still in stage 2, guys. No, we're close below, so back in stage 3 or stage 1. You were outperforming the SPX right here. So all here, it looked pretty good. You could have said, Pat, I'm in above the Ichimoku cloud. Nice double volume, not quite. Green, outperforming the SPX. Yeah, well, there's a monthly defined resistance, guys, in your way. And until you're through, week after week after week, you want to hit it, you want to hit it, you want to go through. And you're not. So here's the weekly defined resistance. I just want to go back on the monthly just to see where my monthly is. Right there. Okay. Back on the weekly. So here, that long line is my monthly defined. Here's my weekly defined resistance. So if I have a close, what I'm looking for is a close above both of those. For the monthly close above the 43.60. Monthly close above the 43.15. And then after that, full steam ahead, stage 2 breakout, monthly confirmed, the whole shebang, and then I could put my little moon symbol right here. But until then, we're having a little rough patch, pulling back within the range. Is it hitting some previous defined? Yeah, it's below the break, that top pattern here. And you could even say you have a measured move. That might bring it all the way down here to the previous breakout right here. So it's still churning. You have some Ichimoku cloud defined support right here. The next support is maybe that 35.50 level, 35.55. And who knows what's going to happen right here. Maybe this is just going to be a wick. The week's not closed yet. This is a Tuesday coming to a close. And we'll see what happens here. So either you could have here a bounce maybe and then come back in and then continue. So it's not quite mature right yet. It was giving signs that it wanted to explode. But failed to break out here. Don't get trapped. Let it churn. Let the market decide what it wants to do with this ticker, with this graph. But eventually, this is a nice base moving sideways, starting to build some Ichimoku cloud support underneath. It's just a question of time, guys. If you get trapped, you'll get whipsawed out. You'll get shaken out with these wicks going down, and you gotta wait. And remember to always look at. And now you're starting to underperform the SPX, so you gotta wait until that goes back up, until you're green, until you're above the 30-moving average. Make sure it's still inclining. That green overlay on the Mansfield relative strength is just awesome. It really gives you a state of a stage 2, pretty much, stage 4, pretty much. So nice health indicator, guys, for there. So we just gotta wait just a little bit for this. You know exactly now the 2 levels that you want to look at. You could put some alerts there, and then until you're through those, just keep this on the back burner. All right. Don't forget to subscribe. Thanks, guys.